Welcome back to Retirement Coffee Talk with Sharice Rivers at Zinnia Wealth. Online, it's zinniawealth.com, Zinnia wealth.com. And we encourage you to go to our website today. There's a lot to learn and tool around and find, and you can learn more about Zinnia Wealth and Sharice and her team and helping you retire. And that's really why we have this show as well, to answer some of those questions that you might have. And one of them is, that's always kind of been strange to me, is what is a long-term investor? I get it. You're 20, you're 30, you're 40 years old, and you've got a lot of time. And so they tell you take more risk because you've got a lot of time. But then when you get to be 65, they tell you dial back your risk because you don't have as much. And I go, well, what if you're in retirement for 25 years or 30 years? Aren't you still a long-term investor, even as somebody who's in retirement? So it's kind of a balancing kind of a thing here, Sharice. How do we rationalize all that?
So am I still a long-term investor when I'm in retirement? It's a yes and no answer. And I would say if you're 35, you're in a different season of life than when you're 65, right? So when you're 35, you are an absolute long-term investor because you're not living on your money, you're putting money in. So you can take risk because when markets go down, as you put more money in, you're buying those stocks at a lower value, right? Okay. So now, fast forward, we're 65. We're no longer putting money in. We are receiving money. We're taking money. We're living on it finally. I mean, that's the whole point of saving these dollars. So now we're in this decumulation phase of our life. And so it absolutely changes. Yet your brain, the neurology, what's going up in that ticking time bomb, you got to change it when you enter this season of life, but it takes people years. And sometimes if it takes you years to say, I've got to get out of this risk strategy and start implementing a whole lot of more safe strategies, sometimes you are the unlucky person. The stock market crashes. Now you're pacing up and down the hallway at 2 o'clock in the morning, your spouse saying, woulda, coulda, shoulda, I could not click in fast enough. I thought I had to have all this growth. And now your 401k turned into a 201k. And now you cannot even book your cruises or your trips for the next 4 to 5 years while you crawl out of this hole, because that is how people run out of money, booking cruises while you're trying to climb out of a hole that you just lost a lot of money in, and not realizing it till later and thinking, oh, my $1 million didn't grow back to $1 million after it went to 500. Oh, I'm not putting money in. I'm taking money out. This is different. Okay, it's clicking in now. Well, it's a little too late. So now you have to change your lifestyle because you didn't tune in sooner. You didn't click and change that, the brain and how it works when it comes to growth and now decumulation. So we're still going to have growth. You can still have money in the market, but you can't have, in my opinion, all your money in the market.
Got it. That makes total sense. The dynamic changes when you go into retirement from saving to spending, and we have to change our philosophy. Is it hard sometimes for you to convince people that they have to do that? Because as much as we say people don't spend their money, there are probably people that look at you and say, well, I don't want to give up growth, Sharice. I want my money to grow even while I'm in retirement. I want to take more risk. So do you have to fight that?
So I'll give you an example who's come into our office. Somebody had $5 million. We did 3 appointments with them, and they're 100% at risk. 100% at risk.
Okay.
And they're in their 60s. And I said, are you guys in a season of life? It's about what you keep or what you make. And they said, oh, what I make. I said, okay, well, my portfolio x-ray is saying if there's another market meltdown and big crash, like a 2007-8 time period, you're going to lose 55%. And I said, how does that make you feel? There was zero feeling. There was zero blinking, zero emotions. I was like, that was an unusual reaction.
That didn't bother them. Wow.
It didn't bother them. And I said, okay, let me tell you this. Your $5 million will go to $2.5 million. His wife turned her shoulders to him and snapped her head and went, what? I understand that. But he still didn't blink, like playing poker with me. No, you don't have to play poker with me. Let's be real. Let's get vulnerable here. And because they just entered retirement a year ago, they don't understand yet. They haven't changed the thinking. We were just talking about that. They haven't changed that the neurology of the brain. I'm saying that, is it neurology of the brain?
That's correct. Yeah, neurology.
Okay, yeah.
Yeah.
The neurologist will even tell you, hey, you know what? Maybe I need to get a neurologist in here. Be like, let's talk about this, because you have to change from that season of life. You're no longer 35, even though on paper we're sitting at the conference table. You look like you're 35 because you're invested like you're 35, but you're 65. And so it hasn't clicked in. And so during the next crash, what if it was a crash in 2 years and you lost 55? People just don't believe it's going to happen. Mm-hmm. No, it's not going to happen to me. And then maybe this person has a lot of income, which they did. But I'm going to promise you something. I don't care if you have a $200,000 check every year coming from real estate because you have all this real estate property, which is the case. Okay, just full disclosure. When your account loses 50%, you're going to say, dang it, Charisse, you are right. This is mentally and emotionally is hitting me different because I'm not 40. Mm-hmm. I am 65. And maybe now I'm 67 and something's changed in your life. It always affects people, but they don't admit it till later. So it's okay to dig deep with your financial advisors, get a little vulnerable, have these really uncomfortable conversations. And I used to not do this with people because I was like, no, it's their prerogative. I don't want to open up that underwear drawer and dig too deep. No, I do now because so many people over the last 20 years of my life said, Charisse, I wish you would have twisted my arm. Like, why didn't you push it harder? I was like, listen, because this is your money. I'm the mediator. I'm showing you the information. But now I'm just like, no. Wake up, smell the coffee. It's real. You've worked for 40 years to earn that $5 million and you're okay for it to go down to $2.5 million. That is not okay with me. That should not be okay with you. And if you want that to happen with some of your money, I'm fine with that. But that's not going to happen in my house.
Yeah, I think that when you start to say, your money could go down 50%, they don't move. But when you say you could lose $2.5 million, all of a sudden it gets real. And that's the kind of straight talk that we need when we sit down and have a retirement conversation.
Straight talk with Charisse.
There you go. Give us a call. Let's sit down and have that meeting and talk about your retirement and talk about how much risk you have in the market. You may have done fine your whole life, but the dynamic changes when you start taking the money out instead of putting the money in. Give us a call. Here's our number, 833-368-3680, 833-368-3680, or ZinniaWealth.com. Look at that gold box there. Click on it. It says complimentary retirement consultation.
Thanks for listening to the Retirement Coffee Talk podcast. If you have questions or would like to begin the process of building a tailored retirement plan, call Zinnia Wealth at 833-368-3680 or find us online at ZinniaWealth.com.
Investment advisory services offered through Zinnia Wealth Advisory, LLC, a registered investment advisor. The firm only conducts business in states where it is properly registered or is excluded from registration requirements. Registration is not an endorsement of the firm by securities regulators and does not mean the advisor has achieved a specific level of skill or ability. Insurance products are offered through Zinnia Wealth Management, LLC, Florida license L078655, and Charisse Rivers, Florida license P037744. Zinnia Wealth Advisory, LLC, and Zinnia Wealth Management, LLC are affiliated entities. The information presented is believed to be current. It should not be viewed as personalized investment advice. All expressions of opinion reflect the judgment of the presenter on the date of the podcast and are subject to change. The information presented is not an offer to buy or sell or a solicitation of any offer to buy or sell any of the securities discussed. You should consult with a professional advisor before implementing any of the strategies discussed. Any legal or tax information provided in this podcast is general in nature. Always consult an attorney or tax professional regarding your specific legal or tax situation. Any client experience discussed on this show are unique to that client. Annuity and life insurance guarantees are subject to the claims paying ability of the issuing insurance company. If you withdraw money from or surrender your contract within a certain time after investing, the insurance company may assess a surrender charge. Withdrawals may be subject to tax penalties and income taxes. Persons selling annuities or other insurance products receive compensation for these transactions. These commissions are separate and distinct from fees charged for advisory services. Insurance products also contain additional fees and expenses. Social Security rules and regulations are subject to change at any time. Always consult with your local Social Security office before acting upon any information provided herein. References to specific investments should not be construed as being past specific recommendations. The returns for various indices discussed in this podcast do not represent the performance of the firm or any of its advisory clients. Returns do not reflect the impact that advisory fees will have on an investment. Past performance may not be indicative of future results. All investment strategies have potential for profit or loss. Different types of investments involve higher and lower levels of risk. There is no guarantee that a specific investment strategy will be suitable or profitable for an investor's portfolio. Historical performance returns for investment indexes and or categories usually do not deduct transaction and or custodial charges or advisory fees, which would decrease historical performance results. There are no guarantees that a portfolio will match or outperform a specific benchmark. Investments in fixed income products are subject to liquidity risk, market risk, index rate risk, credit risk, inflation risk, purchasing power risk, and taxation risk. Because bond prices fluctuate continually, their yields change constantly.